Oh yeah, you asked for it, and I shall deliver. Last week, we talked about Apple stock, gave an in-depth video on Apple stock, including a price target and analysis if the stock's worth buying. This week, we're going to be talking about Microsoft, as you can see on your screen here. Going to be going to an in-depth dive, and again at the very end of the video, giving a price target both for a year and 5 years out. So obviously, let me know if there's more stocks you want me to do this on. And if there are, I'd love to. I'd love to do about one of these a week, if not more. So just let me know what you want to see in the comments, please. Preface this obviously by saying I have some skin in the game here. Right, Microsoft it's a company I own. On my Robinhood portfolio, I own 4.37 shares at an average cost of $93.27. Really good performing position for me. And in my M1 Finance portfolio, I have a little bit more, 4.93 shares at $169.35 a share. So a little bit higher on the cost basis here, but still, we've made some good money off of this company. So I want to preface it by saying that. If you look, obviously, a brief history of the stock, we look at a 1 year performance on the stock. The stock's up 35% in the last year. Pretty high, obviously really good performance for a year's rate. If you look 5 years out, the stock's up around 378%. So there's no denying the performance has been pretty high on this one. Definitely good performance out of Microsoft over the last 5 years. One of the exemplary companies right now as far as stocks are concerned. So it's a one you'd be very happy to own. Let's look real quick at the valuation. One thing I always do when I start looking at a stock, see what it's valued at. So you look at a market cap of 1.86 trillion. It's pretty darn high. I mean, we can't deny that. It's a pretty high market cap when you're talking about over $1 trillion. It's crazy to fathom the company's worth $1 trillion. But then you bring in this, it's nearly $2 trillion. It's a lot of money right there. Trailing PE on this company at 33.5, so not too bad for sure there, and a forward PE of 29.5. If you look at the general market, we're trading around a 35 PE ratio for the general market if you look in the S&P 500, and from a forward PE ratio, actually this thing is it's trading at a cheaper valuation than majority of the S&P 500 actually. So you need to consider that. It's trading a little bit low, so usually that can happen for many reasons. One of which being the company's growth prospects aren't necessarily there, or really anything in that vein. But overall, valuation's not too crazy here. 2.41 price to expected growth. Price to sales pretty expensive at 11.75. But if we look at the revenue on this company, pretty nice to see. You can see there's growth here. We'll get into a chart here as well. Obviously, here we like to look at the revenue line and how it's been consistently growing. You can see that for the last several years has been consistent growth by billions, tens of billions of dollars, which is nice to see. Net income line I also look at because I like to look at net income, okay? Net income, it's been a line that's consistently been growing as well over the last several years. So net income's it's in a pretty good status. It's pretty good status. I don't know why I said status. Microsoft as a whole, obviously, I look at the company, and you got to find out what they offer. Well, this is a company it's very diverse in what they do. You might most well know them for Microsoft 365, which is their suite of Microsoft Office products. Okay. Pretty exciting. So this is a year-long subscription, as you might assume, that allows you to have Microsoft suite of products for a full year. They did that instead of previously, it would be a lifetime for the device, one device only. You pay for the subscription, and that's what you get 1 year. It's on the lifetime of the computer. It's like instead of a subscription, it was more of a just hard software purchase right there. It's so weird to say that I said that weird, but don't worry. Now they've gone to a subscription model, which is the cream of the crop. You remember that one? We all do. Remember when he kept pulling out little creamers out of nowhere? I don't know where he got them from. Someone's got to ask him. It'd be hard to now, but you got to ask where that creamer came from. It's good. It's a good bit though. But subscription services are, I mean, it's where it's at right now. Every company's trying to replicate that because subscription services are recurring revenue. It's something that you can consistently expect. It's not a one-time purchase. It's a every single year, every single month, whatever it might be, purchase that they can rely on. Whereas originally Office was a one-time purchase and that's it. So if you don't get any more customers, you're stuck where you're at. But with a 365 platform, you're making a consistent revenue every year. Obviously, we have Microsoft Windows, main operating platform for a majority of computers. We have the Surface, as in the Surface tablets and laptops. Pretty exciting. Obviously, the tablet of the NFL, as well as just an overall nice little sleek design. We have the laptop as well as the Surface Pro, which is more of a tablet necessarily, but it obviously has the ability to use the Surface or to use the keyboard as well. So a lot of platforms here with the Surface, and you know it's their PC business. Okay, it is their PC business. We also have Microsoft. They own Xbox. Okay, Xbox. You already know that. You know Xbox because it's the second leading console out there besides, there's really third right now, actually. It's pretty crazy. The Nintendo Switch is selling like crazy, but basically there's three main consoles right now, and Microsoft owns one of them. So, pretty crazy to see. Obviously, the gaming industry as a whole has been doing incredible numbers as of late, both in console sales because the new console just released, Xbox One S and One X, I should say. Is it the One X? I think so. Just released, and they're buying every time they come in stock. They're buying immediately. So, pretty exciting to see that. The gaming industry as a whole has just been up and up and up over the last year, full year. We've seen record numbers in the gaming industry, so they've got that going for them. And obviously, with the recent acquisition of Bethesda, they have some exclusive games that a lot of people kind of have a cult following for Bethesda, actually. So, definitely bringing people to the platform in that aspect. We've got, pretty positive things from Microsoft in terms of bullish ratings. Pretty nice stuff here. We have a bullish rating with a price target of 301. Not too bad, but Microsoft also, as you might know, cloud is a big portion of them, and Microsoft Azure is taking over, right? It's performing a lot of business for them, and it's good. But Rosenblatt here says that their analyst has initiated a buy on the company, but there's a lot of buys on this company. We look at the revenue by year, and this is a chart we like to see. We really like to see a chart like this. I mean, you see an overall steady growth. This is since 2005, really 2006, but this has been consistent growth every single year pretty well. With the exception of some slight downturns in 2015. There's very few red moments, and one was during the financial crisis in 2009, and then again in 2015 where we had a little bit of a small little crisis. It was okay, nothing too crazy, but there was a slight downturn in the market. And overall, the economy. So that's where you see these dips. Nothing else too crazy, all things considered. It's been consistent green. I mean, you see a lot of green here on the bottom, which is nice to see. And we look by segment. It's always important to look at segment. We can go into every single segment. Obviously, Intelligent Cloud is going to be the cloud segment, which is the biggest really factor for a lot of the business right now. People are really excited about this segment because of the scalability of it. And you've seen that consistently since 2017 Q1. It's been consistent growth. It's a great chart to look at. The more personal computing segment, obviously computers, it's been showing growth, but not by significant margin necessarily, but it has been growing though still. It's been a steady growth of a few $1 billion over a couple of years, which is actually pretty exciting to see. Then we also have the productivity and business processes, including your Microsoft, Office 365, Windows, all of this, and that has seen some pretty significant growth as well. So every segment of the business is growing. That's what you really like to see. You like to see the business growing in every facet. I mean, it just shows you that they're making the right investments into this company and they're doing great things. The company also offers a small dividend. Dividend yield less than 1% right now, just slightly. But one thing I like is a payout ratio of only 28, nearly 29. That shows there's a lot of room to grow with this company in terms of the dividend as it matures. And they've shown 17 years of growth. I do believe this is a company that's going to be eventually reaching that dividend king level, okay? This is going to be a company that shows dividend growth over a 40-year span in the future. I just guarantee it. This dividend is going to continue to grow every single year. It may be by small percentage points, but at a minimum, they will be paying this dividend pretty consistently because of how the business is performing and growing. Especially, I showed you that net income line. They are bringing in net income like crazy. Now on to my price targets. And here you'll get an idea if I think this thing is a buy. Well, similar to Rosenblatt, I've got a high target, a personal estimate, and a low. My 1 year target, personally, I believe is 265. And there's a reason why that's not higher. I think some people may be asking why that's a little bit lower, because it is. If you're looking to May of next year, I could see this thing being a lot higher. I could see it being at my high. I want my high to really be my real target, which is actually, I made this before Rosenblatt, but hey, what can you say? Their analysts just really like my research. My 265 is baking in the negativity that is in the market right now. We have a lot of stagnation, as I warned there would be this year. I warned the market would be a little stagnant, and unfortunately, it's even catching up great companies in that stagnation. I wish it wasn't, but some great companies are getting pulled aside. There are a few companies that are spared by really the general market being dragged down and just really not showing much movement upward. The economy showed stagnant growth. We have unemployment staying similar, not really growing, or really declining, I should say is a better term for that. But my high estimate is if that weren't the case, where I think the stock belongs, and I think that's 300 a year from now. But my personal target, again, I bake in 265. Now my low is if there's actually a really bad downturn in the market, which I know a lot of people have been talking about for several years now. 2019, it's going to be the crash. 2020, it's going to be the crash, and then we ended up on the year, but there was a crash, but we ended up still green for the full year. So now they're like, well, it's just moved on to another year. There's going to be a full down year. This is if nothing wrong with the business here. I can assure you that. This is only if the general market has a massive downturn. I think this stock will go down by a slight margin from where it's at right now. I don't think much, but I do think it'll go down a little bit. I think it's more of a stagnant stock than necessarily a downturn. My 5-year estimate's a little bit different. My target segment here, I based my 5-year target off of a 10% annualized growth rate. And I think that's relatively conservative for this company. But again, I do want to bake in that there will be a little bit of negativity in the market over the next 5 years. We have been in unprecedented levels of growth for 5 years now in the market, and there will be a slight slowdown. And I'm baking that in, so I'm saying 10% for a really fantastic company every year. It's a little bit low, I get it. My high is still a little bit of negativity involved, but I don't go crazy. I'm pretty conservative on my estimates. I don't blow out the water with it. I think this thing will be $500 in 5 years. If this is baking in a 15% growth rate every year, which I think is a very high growth rate. I mean, you can't deny that. 15% a year, pretty significant over a 5-year period. And it could be a lot higher. I think with the way this company is growing, it has the potential to be a lot higher. But again, I want to be conservative here and modest with my estimate because I really believe there's a chance of some negativity in the next 5 years that'll just cause a slight minor bump in the road. And my low of $300, that would be darn low. I highly doubt that would be the possibility, but that includes a large downturn, maybe some scandals. We'll see what it looks like. But Microsoft has done a fantastic job of staying out of the news, if you've noticed. The only recently are in the news because of former CEO Bill Gates and he's no longer at all serving a role in the company. So you need to consider that. They cut ties right away. Satya Nadella is one of the premier CEOs because he stays out of trouble. He really does. All of the Congress being a little, ridiculous here with companies like Facebook, Apple, and other big tech. Microsoft's really been safe here, right? They've been safe in all this. No one's been messing with them because they've been playing the game very safely. So overall, I think Microsoft stock's a buy. We're talking about annualized revenue here, right around 160 billion, and the stock is trading a market cap of 185. That's weird. 1.85 trillion, which is high. I mean, I'll give you that, but off of a P ratio, I think this thing's trading cheap. When you're talking about annualized growth rate, over 10% is still very, very nice. It's very nice for this company. And I think they're gonna continue that in terms of revenue growth. I think this stock's a buy, and I think my high price targets are actually feasible. But it'll probably be somewhere between the average and my high target, in my opinion. I hope you enjoyed this and you have a great day.